Good morning. Welcome to Market Monday for June 23rd, 2025. Last week, as widely expected, the Fed held rates steady, prompting no shortage of opinions. Fed Governor Chris Waller, now as a reminder, the guy we see on TV is Jerome Powell, chairman of the Federal Reserve Board of Governors. But the decision-making Board of Governors is made up of 7 members, of which the aforementioned Chris Waller is one. And last week, he made the media rounds stating the Fed could cut again as early as July at their late July meeting. We also heard from the chair of the Federal Housing Finance Agency, who oversees Fannie Mae, Freddie Mac, actually calling for Jerome Powell to resign.
Well, Biden had this crazy inflation, and President Trump has come in and crushed inflation, Maria.
Right.
He still has interest rates way too high, and they're not reflective of the great work that President Trump has done. So Fed Chair Jay Powell, he either needs to lower the rates or he needs to resign.
We should note the chairman is Bill Pulte, who was appointed by President Trump, and therefore should be expected to toe that party line. That's the US. What's going on with rates in other parts of the world? We see the overnight rate listed here from lowest to highest. Switzerland, wow, 0.25%. And we can see the last move was a cut in March. Japan, known for low rates, is at 0.5%. Sweden just cut for the 7th time in a row, down to 2%. Of course, here's the US and UK right here, South Asia, and some Latin American countries here. As Ben mentioned last week, it appears there may be some cracks in employment starting to develop. WARN notices, which is legislation that requires layoffs of 100 or more people to be disclosed in advance, appear to be trekking higher, going back to 2021. The Glassdoor Employee Confidence Index, asking if you have a positive outlook for the next 6 months, plunging to an all-time low. But as we know, surveys can be tricky. Remember, here's how Republicans and Democrats feel about how the stock market will do. Here's Bush, Obama, Trump 1, Biden, and Trump 2. So what does the data say? Here's one look that Ben mentioned last week. Continuing jobless claims. This is looking over the last year. Does appear to be trending higher. Now, if we zoom out a bit to the end of 2021, we do see this trend continuing, and now we're at the highest point since 2021. Those are continuing claims, so ongoing payments for people looking for a job. This likely points to a tight labor market where jobs are harder to find. How about initial claims? Those recently laid off and are applying for unemployment claims for the first time. So while continuing claims tend to be rising, initial claims seem to be pretty darn steady. All this said, we do anticipate a shift in the narrative around inflation, employment, and rates, and wouldn't be surprised to see the Fed cut in July. All right, well, though the S&P 500 stock market recently went positive for the year, it's been a meandering, grinding year so far. Is it cause for concern? It appears this is quite the well-behaved bull market. Year 1, the strongest, coming off the lows. This is the average here and the actual market since October 2022. Year 2, still quite strong. Here's the average down here, so a stronger than average year 2. Look at year 3, flat, grinding, muted. We see year 4 pick up on average. However, we also have a midterm election year to contend with, which are usually challenging. Hello 2022. And today we'll leave you with, a few weeks ago, Chad mentioned the Genius Act was passed by the House. Last week, it was also passed by the Senate. The Genius Act, of course, providing stablecoin legislation in the US. While we do expect stablecoins to make their way into traditional finance, we will approach it with caution. We just don't know what the lasting, durable solutions will be. Bank of America launching their own stablecoin, MasterCard integrating stablecoins, Visa and Bridge, Fidelity launching a stablecoin, Robinhood and Revolut, Meta or Facebook might launch a stablecoin, JP Morgan and Connexus. We don't know how it's all going to shake out, but we're monitoring the situation. Have a great week.